A very happy day. I am Dr. Hemalatha from Department of Commerce. So today we will just have a very small topic to be discussed with respect to business taxation. Taxation as such is a very broad area which comprises of direct and indirect taxation. Today in our discussion, we are going to discuss about indirect taxation, that too in specific GST. Okay. So, we are going to look into what is GST and what is the need for implementing, or because only if we understand the need, the concept will get digested. So, we just look into what is GST, what was the old regime and why the concept of GST was implemented. So, what will be the effect in new regime. So, these are all the three things that we are going to look into in today's discussion. So, first we will discuss about what is GST and what are the basic concepts of GST. So, GST is nothing but it is a, as I said, it is an indirect taxation. Okay. Indirect taxation can be levied on two bases. One is called as goods and service tax and second one is called as customs duty. Okay. So, goods and service tax is nothing but GST. So, GST is basically based on the concept of value added tax. Okay. So, tax will be charged or levied only on the value addition that is being done. Okay. So, it is an value added tax. So, GST is a continuous chain of tax credit. Continuous chain of tax credit means there are a lot of intermediary people in the system. Okay. So, whatever the tax that is being paid by the first person, he will be taking benefit of the tax that is being paid and only on the tax on value addition should be paid to the government. So, it is a continuous chain till it reaches the end consumer, the final consumer. So, that is why it is called as a continuous chain of tax credit. The next one is that the burden borne by the final customer is being minimized by cascade is nothing but like a waterfall. Okay. When you flow water, what will happen in the waterfall? All the water, whatever is being given on the top will be received in the last floor. In the same way, in the previous regime, whatever tax system that was there, all the burden was falling on the end consumer. By implementing this GST, the cascading effect, no cascading effect, it means that the effect of cascading was eliminated or removed. Okay. So, that is one of the basic concept that we need to understand with respect to GST. Next is that is the important thing is that GST is comprehensive because it is going to be subsumed, various taxes are going to be subsumed by GST. Subsumed means taken in. Okay, all the taxes are being taken in by the GST. So, it is a comprehensive, multi-stage, already I said each the intermediary person involved, each and every stage is a multi-stage. Okay. So, multi-stage destination based consumption tax, the final destination, based on that only the tax is going to be charged and based on the consumption it is going to be charged. So, these are the things that we need to know about GST. Next, as I said, the subsuming. Okay. Subsuming means earlier there was more than 13-14 tax systems. Each and every state has a different tax system. Let us take value added tax. In Tamil Nadu we had TNVAT, Tamil Nadu value added tax. In Andhra they had APVAT, Andhra value added tax. So, each and every state had a different tax system. That too in earlier regime it was an production based taxation. But now we are moving on to the consumption based, the destination based tax system. Okay. So, that is why lot of tax systems are going to be consumed, are going to be taken in, are going to be absorbed by GST. So, what are all the tax system which is not going to exist or which is not existing because of GST? Okay. The first one is, if you look into GST can be levied with three categories. One is that called as IGST. IGST means whenever we make any transaction which crosses the state borders, the transaction or the supply will be coming under the category called as IGST. Okay. Next one is CGST. CGST is Central Goods and Service Tax. Central goods and service tax means any transaction which crosses the state borders, then automatically the role of the center has to be played. So, the tax system will be divided into whatever the tax collected, that has to be shared by both central and state. That is why it is called as a dual GST model. Okay. So, dual GST model means whatever the transaction that is happening, okay, once it crosses, once if you are just making a transfer within a state, restrict I am buying from Chennai and from the person who is in Trichy. So, it is within a state. In that state, in that case it will be called as CGST and SGST. Okay. CGST and SGST means any transaction where it is happening within the state. Within the state, then two taxes, one is CGST and SGST will be collected. But when the transaction is crossing the state borders, okay, either it can cross Tamil Nadu or it can cross India, whatever it is, once it crosses the state borders, then automatically the role of IGST will be played. Okay. So, just we were explaining about the dual GST model. What is the meaning of dual GST model? Okay. Dual GST model means even though the concept of GST is basically one nation, one tax. Okay. In spite of we have different states, as a whole nation, the tax system, the indirect tax system is going to be one. So, that is why it is called as one nation, one tax. Okay. So, this one nation, one tax system is implemented by consuming the model called as dual GST model. Dual GST model means whatever the tax charged, whatever the tax that is levied on the goods or services, then that should be taken or shared by both center and state. Okay. So, that is why it is called as a dual GST model. Once it crosses the state borders, automatically only IGST will play a role. So, again just a recap, when the transaction is happening within state, then the dual model, that is whatever the tax levied will be shared with center and state. That is why it is called as a dual GST model. But when the transaction crosses the state borders, automatically IGST will be levied. Okay. So, what are all the taxes that are being subsumed? Okay. When GST is being implemented, lot of tax systems are being taken or consumed by the GST. The first one is central excise duty. Central excise means whenever any goods are being manufactured or produced, the duty charged on that, the tax charged on that production is called as central excise duty. This central excise duty was exclusively taken by the center. Okay. In the same way, additional duties on customs, which is also called as countervailing duty. Okay. So, countervailing, additional duty on customs or countervailing duty means if you are importing a product, okay, the government might lose some excise duty. Let us take, I am going to buy a car in India from an Indian manufacturer. Okay. So, when something is manufactured, what will be paid in the earlier regime? Central excise duty will be paid. But whereas, when you are importing a car, what will happen? Actually the government is losing its central excise, because if the car was produced in India, the center might receive a tax on that car. Okay. But whereas if it is imported, the central government might be, the center might be losing its tax on the revenue by way of not paying that car. So, to compromise or to just substantiate that, the same amount of duty will be charged on import of the car, whether whatever brand it is, since it is being imported. Okay. In case if the car is manufactured, whatever the duty that will be collected by the government, the same percentage, the same level of taxation duty will be charged on the car that is being imported. So, that is called as countervailing duty. Okay. So, that is not going to be there. Next is that service tax. Okay. Earlier we had two different systems. One is called as the commercial tax. Commercial tax means when you sell any goods, you have to pay the commercial tax. When you provide any service, then you have to pay the service tax. So, service tax and commercial tax are two different act that was there. But now GST is going to replace all this commercial and service concept together. So service tax is not going to exist, it is going to be taken in by the CGST. Next, all the surcharges and all the other cess is going to be replaced with CGST. What are all the taxes which is going to be subsumed in or replaced with SGST is value added tax, that is the state level value added tax is going to be replaced with SGST. Entertainment tax, if you go for theatres, if you buy a movie ticket, you can see the entertainment tax. Okay, that is going to be replaced with the term, earlier they used to take it as entertainment tax, now it is going to be replaced with CGST and XGST. Luxury tax, okay, on luxurious services or luxurious products, a luxury tax will be there, that is going to be replaced. Lottery tax, entry tax, purchase tax, stamp duty, goods and passenger tax, vehicle tax on vehicle, electricity, banking and retail. If you just look into your bank statement, normally they will charge service charges. On that the tax is going to be collected from the banker. So all these are going to be replaced with the concept called as SGST, state GST, goods and service tax. So these are all the tax which is going to be subsumed or replaced with the name called as IGST, CGST and SGST. So this information I have just taken from Tax Guru, and we will just look into the old system and the new system where we will have the clarity of why all these taxes are being subsumed. Okay, why GST has replaced so many tax systems or the types of taxes as such. So let us take any natural product. Okay, so he is getting from a farm. So from a farm means something, he is not going to spend any cost, just he is reaping out the benefit. For that he is just cutting, chopping, shaping it and giving it to the customers for sale. So that value addition, because he need to just prepare that, he need to tame that, he need to prepare the product for commercializing. That is called as value addition. Let us take, we are eating rice. Can we just eat the paddy as such? No. It has to be processed, it has to be removed, it has to be polished. Lot of stages are there till it reaches us as rice. In the same way, any natural product, directly it cannot be consumed, it has to be done with some processing. So that processing is nothing but the value addition. Let us take, for the raw material I have not paid anything. But the value addition, I need to chop it, cut it, I have to pack it, all that, the value addition, VA is nothing but the value addition which comes to 100 rupees. Let us assume for easy understanding, the tax percentage is 10%. So how much is the tax I will be charging? 10% on 100 which comes to 110. I am selling it to you. So how much you will be paying? You will be paying me 110 rupees for the product. Next, you are the person B. You have purchased it for 110 rupees, you have purchased as a bulk. So what you are doing, you are repacking it, you are making it into a small packages. Your value, just like that you cannot, you need to appoint a person for making this, dividing or making into a small bags. You have some expenses, that is called as value addition. Okay. So you are spending an amount of 50 rupees from your pocket. So how much is the total value? The total value is 116 rupees, that is you have purchased for 110 and the value addition is made for 50 rupees. So the total amount comes to 160 rupees. So as we discussed, let us assume for easy understanding 10% is a tax. So 10% of 160 comes to 16 rupees. Okay, when you are selling it to your customer, you will be doing 110 plus 50 plus the tax 16 rupees. You are going to collect as 176 rupees. Kindly listen, value addition is nothing but not only the amount that you are going to spend, that includes your profit also. So you might be selling it for 176 rupees. So next, the third person, he has purchased it for 176 and he is making a value addition, just keeping it in a shelf and selling it. Okay, so the value addition comes to 30 rupees. So 206, 10% comes to 20 rupees 60 paise. The total value that he will be charging his customer will be 226.6. So if you take all these stages, each and everything is a stage. That's why GST is called as multi-stage. Okay, multi-stage. because we have different stage. How many ever intermediaries are there, it crosses each and every stage. So, each and every stage, the first stage the tax paid is 10 rupees. Second stage the tax paid is 16 rupees, and in third stage the tax paid is 20 rupees. On the whole, how much is the total amount? 46.6 rupees is the tax. Who is going to bear this? The last end consumer. The actual product value is 100, but when it reaches the end consumer, the final consumer has to bear the tax of 46 rupees. Okay, that is called as cascading effect. Whatever we add, who has to bear? The final end consumer has to bear the tax. So, in the old system, the product, the end consumer was having a burden of paying 46 rupees as the tax. After implementation of GST, okay, this was the old system. Let us take, you can take it as a distributor, wholesaler, retailer, or different stages you can assume. Okay. So, the same concept after implementation of GST, can you just look into how much is the tax burden of the end consumer? It is 46 rupees. Now, we will just look into the comparative study of the new system. So, in the new system, the same concept, some raw material is from the field, it is being taken. So, the tax is after 10%, it is 110 rupees. Now, what is the thing that is being that we discussed with respect to GST? GST is in the tax credit is a chain, like it is a continuous chain of tax credit. What is the meaning of continuous chain of tax credit? That is getting the benefit of tax what we have paid, that we can get it. So, that is called as a tax credit benefit. If you look into the first stage, the value addition is 100 rupees. The amount that I have given you is for 110 rupees. So, how much is the tax I have collected from you? 10 rupees is a tax I have collected from you. On the other side, how much is the tax that you have paid me? 10 rupees is a tax that you have paid me. The second stage, that is you, the distributor or the wholesaler. You are buying from me, you have bought it from me for 100, and you know the fact that the tax component is 10 rupees. So, what is the actual value? So, that is why it is called as value addition. Value addition means it is a tax on value addition. So, it is not, you should not consider the value, whatever the value addition, on that alone the net tax will be only on value addition. Okay. If we take the second stage, it will be very clear. So, the cost of the product is 100 and you are making an expense of 50 rupees. So, the total value is 150 rupees. Out of that 10%, which comes to 15 rupees. Now it is 165. You are selling it for 165. Why it is called as an input tax credit? Actually, the tax is 15 rupees. But how much you have paid to me as a tax? Already you have paid 10 rupees, right? So, 15 rupees you are going to collect from your customer. 10 rupees already you have paid. So, how much is the remaining tax? Only 5 rupees is the amount that you need to pay to the government. Okay. So, that is why, just if you calculate the other way, it is a tax on value addition. Kindly look into how much is your value addition in the second stage? 50 rupees. How much is the tax percentage? 10%. So, 50 into 10%, how much it comes to? 5 rupees. So, 5 rupees. That is why it is called as a tax on value addition. VAT, value added tax. GST is a value added tax. It is not on the whole component. Whatever the value addition that we have made, only on that component we are going to charge the tax. If you move on to the next stage, the person whom you have sold, the retailer is going to sell it. So, what is the actual cost of the product? It is only 150. Okay, and he is making a value addition of 30 rupees. So, 10% comes to 18 rupees. So, it's you are selling it for 198. So, how much is the end consumer's price? It is 198. Kindly look into the old regime. How much is the total amount? 226. But in the new regime, after implementation of GST, what is the price that we can get it from the end consumer? It is only 198. So, 226 was the earlier tax system that might be charged from the end customer, whereas in the new GST system, how much is the amount that will be collected from the end customer? It is only 198. That is why when we just discussed with the concept of GST, no cascading effect. The burden borne by the final customer is reduced by way of no cascading effect. So, it is just this example can make us understand in the old regime how much the final consumer might be purchasing it for 226. In the new regime, how much the final consumer will be purchasing it for 198. Is the customer benefited or not? Yes. That is why GSV is being replaced with lot of tax system. That is why it is called as one nation, one tax, to minimize the complexity with respect to the indirect tax system. Thank you.